Hi, this is Tom Nunemaker with Capital Discussions. This is my trading update for August 1st, 2014. So we have the 3-minute bars of today's price action. It started up, went down, came back up to just slightly above the close yesterday, and then kind of drifted down into the close. And our net was SPX closed at 1925.42, down 5.25 or about 1/4%. ES futures are still trading. It looks like they might have recovered a little bit. Let's take a look. This is the ES futures for the day. This is the overnight action. You can see the volume started picking up from overseas trading during the night and sold off, and then came back in here. I actually put a buy order in about here, got filled, and it was up like $800, came back down. I had to stop, and it took me out for a $300 profit. It came up, went back down during the day, during the normal US market hours, and you can see the similar pattern that we had with the SPX. And we're right now trading at 1920, 1975 bid, 20 ask. Now I put on the charts, I display it like this at Interactive Broker, so I see the bid and the ask. Because right now you can see the price is kind of bouncing back and forth between the bid and the ask, people just buying and selling. But the price isn't really changing. It's just the last sale price is changing. But in fact, to me, the price isn't changing. Okay, there it just went down a tick. So you can see when the bid ask, the whole thing moves, then that's actually movement in the price. But right now, there's just people buying and selling at the bid and the ask, but the price hasn't changed. So to me, that's really no price movement. So that's just a little tidbit of how I look at my price charts. Okay, so what else do we have? We have the volatility charts. This is pretty interesting. This was yesterday, big sell-off, volatility. The VIX started out, you have to read on the right, so around 14.25, closed up here at 16.99 roughly. And interestingly, that's almost exactly where it closed here. Actually, what did it close at here? 16.95, closed, it's at 1700. I guess 15 minutes after the market's closed, it still trades. So it's just a few pennies away from where it closed yesterday. But market rallies, VIX went down, market sells off, VIX goes up. So these are pretty much inverse of each other, the VIX and the ES futures. Now I did have an interesting situation today, right here. You notice the front month futures got more expensive than the second and third month futures. So that's the definition of backwardation. So that's the first time we've seen backwardation for a while. And you can see, when did that happen? Well, the market's going down and people are like, oh my gosh, it's just the bottom's falling out. So a little bit of fear took over here. Buyers came in, fears kind of went away, and the front month futures stayed below the second month futures for the rest of the day. Got pretty close a few times to going back over it. But that's a sign that there is definitely some fear out there. Now, people are remembering yesterday's 40-point drop, and they see this big move down. They're like, uh-oh, here we go again. So that's where we see a little indication of backwardation, when this future, the front month future, gets more expensive than the back month futures. And it's kind of interesting to plot it intraday like this, so you can actually see that. But let's take a look at our trades. I had quite a few trades I did today. Well, I guess not as many as yesterday, but so here's the futures that I bought at 1915, sold at 1918, so made $275 minus commissions. Then I added a few positions to my SPX and ES trade. I did some put debit spreads on both of them to kind of flatten it out and keep the theta going. So let's take a look at those. The first up will be SPX. Okay, so here's SPX. We're down 1200, which is about where we were yesterday. Now the market did sell off a little bit, like I said. 1925, so 1925.42 is actually where it closed. Oh, and I have to update these prices again. Hang on a second. Okay, prices have been updated. And we're down 1161 right now, which isn't too bad. I actually sent my trades to Dan Harvey, a good friend of mine, and he said my trade's looking better than his. So I did a pretty good job keeping things flat and under control so far. So let's see where we are. Pretty good, right? Nice and flat. Loss is pretty much under control, like I said. If you look at a T+1, this is our 1 day, 1 standard deviation of movement. And that's at the SV, that's the volatility that the underline's been having. But we should change this to the at the money put vols. And then we'll get a better view of it. Now, just let me back up and show you what the trades were that I did. So we had on SPX, I did a 1910, 1865. So 1910, oh, this one right here, +1, -1. So what that looks like by itself is this. Let me zoom out. So it's about $1,000 to put that trade on with a possible gain of 3,400. So 3-to-1 risk-reward ratio. A little bit out of the money, put debit spread. But I wanted some negative deltas and I wanted some more help if it kept going south. So I put that on. And actually, if I take it off, and we take a look at it, then our deltas are positive slightly, and Vega is 350, and the risk graph looks like this. If we put it on, then it looks like this, and we can compare them, zoom in, get a better feel for it. Okay, so they're pretty close, really. The blue one's the one with the extra debit spread. Let me get rid of some of these extra lines. Put 3 lines on. So short term doesn't make too much difference. As we start selling off, it does make a bit of a difference. I just wanted to kind of balance it more. On the upside, there's not as much risk because once it starts moving up, we'll start taking some of these things off and raising this part of the chart up. Now, naturally, when we add more put debit spreads, that's reducing our margin. So our margin went from 33,000 down to, what's this, about 25,000. And these put debit spreads are just flattening things out like crazy. And let's see. Oh, let me bring up the Greeks calculator. 1 second. So here's the option positions Greeks calculator. And I was wondering about this theta of 169.72 to delta, but if you look at it, that's on the downside, which makes sense. So if we go down to 1908 from 1925, then we're going down and delta is going to be pretty close to 0, so that multiplier could be right. So it's basically saying that if it's green and green here, then that usually tells me that the line is the T+0 line is pretty flat, and you can see it looks pretty flat to me. So I think we're in pretty good shape. Hopefully the vol will come out. If we can get a couple points of vol coming out of this, then our lines are starting to look pretty nice. And we might be able to actually make some money on this trade, despite the big market move. So we're looking pretty good on this one. Let me load up ES and we'll go over that in a second. Okay, so I have ES loaded. Now the problem with ES right now is there's a small window during the day when the futures options aren't trading, and that's exactly right now. So the only thing I have is last price, but option view, and I can't calculate a mid price because there's no bid and ask. So option view has stored that information, so I have to kind of rely on option view until those markets reopen. I don't know, it's not going to be very long, a few minutes. But based on that, right now the combined position is down about $500, not too bad. If you look at the put vertical that I have that I put on for a credit, it looks like this. So looking pretty nice. And if I look at the butterfly, it looks like this. Let me zoom in so you can see it. Alright, so now let's talk about this. So the trade that I put on today for the ES was a 1920-1855 put debit spread for $11.50. So that would be this one, 1920, 1885. Now, I didn't want to do overlap these strikes. I didn't want to add a long to this and just realize my loss. So I just added to the position instead of actually just moving this down. So I could have used this for my long strike and this for my short strike, but I wanted to kind of keep them separate, if you will. So yeah, I'm getting a couple extra more strikes in here to manage, and it's starting to look not quite like a butterfly, but you know, it still has that basic shape. Right now, the ES is at 1918.25. So let's take a look at that on the chart. 1918.25 is about right here. Actually, I can just do this. 1918.25. There, now it's exactly there. So this is where it is right now. We're negative delta, so that's actually going to help us a little bit as we sell off. So I wanted a little bit more room on the downside, so I've got 20-30 points to go on the downside, and actually it's going to be helping me as we go because I am negative delta right now because I'm not convinced it's going to head back, and if it does, it's limited on how far it's going to go down because of this. So I'll just start peeling stuff off or maybe adding some more spreads, but you know, I'm more worried about the downside at this point. If I look at the price chart, let's see, ES is here. Let's do a couple months. So here's the ES price chart. You know, it's definitely moving down. Volume's picking up, so it's, you know, definitely accelerating. So tomorrow could easily go down, you know, another 10-15 points. It could end up here tomorrow or down here. We don't know. The only thing I do know is that I'll react to it, whatever it's doing. So this is where we are now. I think we're in pretty good shape. We have pretty decent data. Our lines are zeroed out pretty well. Not completely zero, but I'm leaning a little bit short because I'm more worried about the downside at this point on this trade. Let me get the option Greek calculator going. Give me a second. So these are the option position Greeks for the ES trade. You notice that it's green and green, which is fine. It should tell me that the lines are pretty flat, which they are. I'm leaning just slightly to the downside. There's not much risk on the upside, naturally, because if it does keep moving, start peeling off those debit spreads, etc. Or we can even sell or buy a futures contract if we wanted to, I suppose. But I wanted just a little bit of protection on the downside if we keep moving down. So I'm short delta. This wand is where we're actually at, not this black dot. So we can move down another 20 or 30 points with no problem, which is what I want. And I'd like it ideally to just settle down and stay in this area so our time decay can kick in. You know, even for 2 weeks, if we stay in this range, we'll have a decent profit on this trade. Remember, the margin on this thing is really low. Okay, I see the futures are open again. They're at 1917 even. So that puts us here. So they move down just a little bit more. Let me see if I can get any quotes. Oh yes, we do have quotes now. So let me go ahead and update the prices with the live quotes. Hang on a second. Okay, so this is live right now, with updated prices, and we're actually down at 1916.50 now, so it's just moving down a little bit more. And I think I just messed up the prices again, so hang on a second. Okay, so here we are with the live prices. Our debit spread is up 338. Our broken butterfly is down 785 for a net of down 446 total. So if we combine these two and look at them, it looks like this. Kind of a nice chart. And this is in 15 days right here. So we could have some nice profits. If we just look at the broken wing butterfly by itself, then it looks like this. And again, we have a nice range here. So this is the next week and the next 2 weeks. 50% chance right now with no volatility changes or anything. Let me make that 0. Might be a little different. 48% chance, and in 22 days, 52% chance of making money. and this is 37. But because this is underwater, so if it does rally, we'll bring this up over here, take some of this down, bring some of that up, maybe increase the size of the trade a little bit. But overall, I'm pretty happy with it. We're right in the middle of the tent. Lines are very flat, so let's see where we go on Monday. Thanks a lot. Have a good weekend. Bye.